So what are the requirements for canceling an insurance contract? So first, the insured can generally cancel an insurance contract at any time. Most states do not allow the insurer to hold the insured even throughout the specific stated term of coverage. The insured, as a consumer of this type of service, can stop paying premiums and cancel their coverage at any point in time. Okay. Now, the insurer, all right. When can they cancel coverage? There's a lot of consumer protections there in place for the insured. Generally have to give statutorily prescribed notice and a procedure or process that they have to comply with for canceling it. Generally, what they would have to do to continue coverage, where they could seek other coverage sometimes, things like that. But generally, the specific date at which point the insurance coverage will end, and they have to meet that statutory period ahead of time for giving them notice so they have running room or time to seek additional or future continuation of coverage. Now, generally, there are several situations when they can unilaterally cancel the insurance policy on their own. So, to start with, the non payment of premiums. Now, they're still going to have to meet the disclosure requirements and the statutory period, but the non payment of premiums can give rise to a reason to cancel the insurance contract. Okay, because on that side of the contract, the insured is not performing. Second would be in lots of situations, the insurer can void the contract based upon any level of misrepresentation made in entering into the agreement. And if it's intentional, that's fraud. So any fraudulent statements made to induce the insurer into covering or entering into the insurance relationship with the insured. Generally, for non-intentional, non-fraudulent misstatements, there's that contestability period. Outside of that, the insurer can't cancel the policy, but if it's within that allotted period of time, they can. But generally, they can always cancel the policy for fraudulent statements, particularly when the fraudulent statement is what ultimately gave rise to the type or contingent harm being claimed at a specific point in time in the future. And then conditions in the policy. And that means certain situations have to arise or whatever before insurance coverage, before the insurer is obligated to perform. Now, in some situations, conditions will be in there. If something occurs, the contract is rescinded. There's no longer an insurance contract upon the occurrence of these contingencies. And then lastly, just the end of the term of the policy. The stated term of the policy has come to an end. They've given the adequate or required statutory notice, 30, 60 days, whatever, and any other disclosures for reasons for discontinuance of service, what they would have to do to continue service if they were offering that, etc.